Hello and welcome to Moneyinfo's latest edition of the Advisor Unplugged podcast. My name is Sim Sanger, the Business Development Director at Moneyinfo, and I'm pleased to be joined today by David Ferguson, the CEO of SECCL. Hi, David.
Hi, Sam. Great to see you.
Yeah, you
Happy
too.
to be on your show. Yeah.
Yeah, thank you for joining us. I think the last time we met, David, was probably well over 10, 12 years ago, down some dodgy back street in Edinburgh. I should clarify, it was at your offices at the time, and we came
Yeah.
to talk to you about what we were planning with Moneyinfo. And one of the things that stuck in my mind is you were very, very quick to decide to integrate with us in terms of pushing platform data into Moneyinfo when we had no clients, right? And that was quite an interesting move because most of the providers we spoke to at the time took the view, why should we? Who's asking for it? We have our own portals, etc. But so I know we're here to talk about the wonderful work you're doing at SECCL, but just out of interest, what made you make a bold move like that,
Yeah.
given it wasn't
I think
proven?
there's a general, I guess we always believed in a directional trend of more digital engagement with clients, right? And you guys were obviously probably pioneering that at the time, or certainly near the very edge of it. And it's always felt to me that ultimately the data that people like platforms have custody of should be used as much as possible for the benefit of the client, right? And it shouldn't be sort of have a wall garden round about it. And it's felt to me anything that we can do to allow advisors and their clients to understand what's going on a bit better is just like a bit of a no-brainer, to be honest. I know that's not a universally held view, but the general, I guess, stance or hypothesis that no one system's ever going to do everything, or certainly not for everybody anyway, and therefore people that are doing interesting, helpful things should be able to connect to each other in the most positive way. And I think that was probably taking me back to when I was a younger man, so I can't really remember all the details, but it would have been something like that, I think.
Yeah, great. Moving on to SECCL, for the listeners that may not be aware of SECCL, I believe it's an abbreviation of Securities in the Cloud.
Not many people know that, actually. It's kind of funny.
Well, it was Dave Harvey that kind of explained that one to me, so I've had a bit of an inside track there. But so for the listeners that probably aren't aware, SECCL is a custodian and investment technology provider to advisors or DFMs that want to run their own platforms, and also to fintechs as well.
Indeed,
Fintechs that need their own platform, want to get to market quicker.
Yes.
What made you join?
So I think it felt like there was time for something new in the sector. We've had the kind of fun supermarket thing and the wrap platform thing, and what I was really drawn to with SECCL, although we weren't necessarily using language at that time, was this concept of, we sort of call SECCL an embedded platform, where we've got all the capability of an investment platform, but you can plug it into any number of user journeys on the front end of that. And it actually, in some ways, an extension of the conversation we'd had 12 years ago, I guess. But it felt to me, whether that's going out to fintechs, whether it's going out to advisor firms, DFMs, and even allowing different firms maybe to have several different client propositions on the front of our API and the product that sits behind that, just felt incredibly exciting. So I'd kind of seen SECCL from afar, I guess, back over the years since Dave and Hugo got it off the ground and got it moving, and it looked really, really interesting from a technology point of view. And I have to say as well, I was very, very attracted to working with Octopus as a shareholder in the business. That's been I think the combination of what we've got on the product and technology side and operational side together with the ownership was a really compelling thing, to be honest. And the business also had a very positive culture, which was, there's some stuff we had to do, I think, just to try and maybe be a bit more delivery focused within that. But fundamentally, it was set up to be a modern kind of corporate citizen that was trying to be a real force for good. So all those things combined, to be honest, Simon. Again, I touched it earlier. When I was, after my last role, I left Nucleus, I was I guess I was older than I was when I started Nucleus, inevitably, because that's how life works, obviously. And it felt to me, I think I probably would have gone and done a startup, to be honest, if this opportunity hadn't presented itself, because there weren't an awful lot of things out there that I felt were necessarily terribly well set for what was going to come next. So yeah, it feels to me SECCL's got this combination of it's a technology and operational infrastructure which can really have material positive change backed by an organization which I'm just incredibly proud to be associated with and work within. And then we're kind of just trying to move in the culture on a bit to be all the positives we had before, in terms of trying to be really driver of change, which is actually very consistent with Octopus, to be honest, but also just get a bit more edge on delivery.
Well, he's certainly got a feel of being the disruptor in the industry as well. You're already shaking a few feathers, just like you shook a few of the life company provider trees in the past. But what would you say are the main problems that you're solving in the platform market, or what do you see as the main problem in the platform market?
I think I think that what I like to do, actually continuously, but certainly periodically, is just stop and say, well, if the world stopped and we started this whole thing again, how do we do it? And I think sometimes the sector develops in a certain way that you end up in a position where you wouldn't necessarily go there if you were to start again. And I think what we've got at the moment in the platform market, especially the advised platform market, which I guess is the predominant audience here, is typically an outsourced technology and operations vendor with an enormous amount of corporate overhead sitting on top of that, and an enormous amount of target profit margin sitting on top of that that's been set as expectations for shareholders. And I think the average revenue yield in the advisor platform market, say 25 basis points, in very, very broad terms, that might be about 1/3 for the product and operations, 1/3 for the corporate apparatus sitting on top of that, and 1/3 for the target profit margin. Okay. And I just think customers are dramatically overpaying for something that is actually insufficiently digital, not as good as it needs to be, and they're maybe paying 2 or 3 times what they could be. And obviously sometimes clients are even paying over 30 basis points still for advisor platform, which just seems kind of wildly unacceptable. Now, I don't think, as with all passage of history, I remember we launched Nucleus. It didn't mean that choosing Scandia 10 years earlier was a bad decision, because it was a good decision at that time. But I think when we see how things move on and advance, it means it's appropriate to revisit some of these decisions and see whether we're still doing this as well as we could be. And I think, technology's moved on enormously now, and we're reaching, levels of efficiency in our business operationally and even things like deployment and maintenance costs that are just frankly much better, much tighter than anything we've ever seen. I mean, we do best part of 100,000 cash transactions a month with 2 people working in that team, which is just, I don't know what the people have got about it. I think they've got 40, 50 people doing that sort of thing for that sort of level of activity. So you get in this kind of hyper efficiency coming through, which obviously at the moment it's just a data point, but over the medium term, one would expect that to lead to kind of much more efficient, low cost proposition for clients.
Right. So let's just stay on the economics of the platform model for a second. And clearly there's different versions of platform, right? Loads of different labels. Yeah. You've got the traditional platforms, right? What you see is what you get, but does incredibly well. Just what it says on the tin. I would have put something like a Transact in that space. Yeah. Then you've got the white label platforms that gives firms a little bit more customization about controlling the customer's journeys to a certain degree, certainly with their corporate colours. You've got white label plus, where an advisor firm probably maybe become an AR of the platform as a service provider, but then they can also, to a certain degree, control the platform pricing. Yeah. Then you've got you on the other end of the spectrum, which I think the term that's evolving is advisor as platform, right? Yeah. If the platform earnings are broadly 25 to 30 bips, but they also cover the platform as a service, or the regulatory and the kind of legal responsibilities that go along with that, where are the efficiencies created by going down the advisor as platform route?
Yeah, so, well, first of all, I'm not sure the advisor platform is the right label, but I know it is the one that's being used, so I'll not make too big a fuss.
We don't like to be called a client portal, right? But
yeah, exactly, yeah. So, I think what's quite important is everybody's playing a role in this part of the market in delivering a financial planning solution, right, or outcome for the client, right? And whether you're an asset manager, your platform, you're a retail platform, you're a DFM, whatever, you're all in that chain. And that's why we prefer this language of an embedded platform, because we're kind of embedded into that financial planning process. But putting that to one side, yeah. I think what if I look at where we price SECCL, we probably priced at something like 30-ish% of what a typical client is paying for a platform. There's plenty of room in there to do governance and oversight of what's going on. And I think that might not always be true depending on the vendor, right? So if you've got a vendor who's only doing 3/4 of the work, or can't supply you the data to your oversight, or is all over the place on reconciliations every day, or they're not operating in a very tight manner, then obviously the oversight and governance and management of that vendor is going to be much greater, and it's going to make the proposition much less viable. I can see that argument, right?
Yeah.
It might be that some of the history here is, as people have in the past chosen vendors, whether they be corporates or advice groups, frankly, where the technology was less evolved or the operating model was less tightly defined, you've ended up with kind of quite a big chunk of kind of, I used the expression earlier, corporate apparatus or corporate overhead sitting on top of this. I think that the challenge we're laying down is, if you've got something which is properly digital, proper access to all the data, operating to really, really tight standards, then that is not necessarily required, right? So you're still going to do oversight, still do governance, still be responsible for this thing. But the idea that this requires 100 people, or even frankly, sometimes even more than 5 people. I mean, we've seen people running these things with 2 or 3 people alongside other kind of risk and governance parts of their business. So it's not to say it should be taken lightly, but it doesn't mean the cost of doing it is enormous, right? And someone made the observation to me recently, just because other people have found this highly complex and expensive doesn't mean it need always be, right? And I remember years ago, actually, when I don't know if you remember a guy called Ned Cazalet, used to be a sort of consultant in the sort of life insurance and platform sector. I forget the name, Cazalet Consulting, I think. And he made the observation at one point that when collectively Standard Life Wrap or something and Elevate had reached £20 billion, right? They'd invested £400 million in capital to get to that point, right?
Right.
At the same time, literally the same time, Nucleus, Eccentric, and Transact had reached 20 billion collectively as well, right? So the two pools were about the same size. And I think I'm right in remembering that the 3 smaller companies or less corporate companies had, I think, invested 40 million or something. It was 1/10 of the capital to do this, and obviously, like, Transact has obviously been a really well-regarded business all the way through that. And so this idea that, and it's always put forward by corporates because they always say you have to have deep pockets, and that's always the line because they want to preclude innovation. You always hear the line that you've got to have massive sums of money and massive infrastructure. And real life is that you've got to have massively complex infrastructure to run a kind of messy old insurance company or a kind of shonky asset manager. It doesn't mean that that's the only way to do it, right? And there are better ways of running companies than sometimes you see over there.
Well, isn't the reason why a lot of certainly the corporate type platforms have massively complicated infrastructure is because they were all pretty much kind of built up in the noughties, right?
Yeah,
in the early 2000s, and they've evolved, yes, but they've been built upon legacy tech.
Yeah.
And the cost of upgrading those systems over time, number one, it's horrendous. Number two, you hear the migration issues coming out in the press. But there's also a challenge of the cost associated with those upgrades and the ongoing maintenance. And it's one of the things, there's quite a few parallels actually with what we're doing in the kind of client portal space.
Yeah. Because
we're very much aligned with the CRM providers, and we're following that journey. I started my career with First Software, or Advisor Office, which has only just been mothballed last month after all those years. And he said the good old girls had some good innings there. But again, at the time, the biggest competitor was IntelliFlow.
Yeah.
And collectively, I think at the time we left the business, IntelliFlow was around about 25% market share, doing really well. Advisor Office at its peak hit 40% market share, but both systems were getting overly complicated. Okay, and you had to keep building new features, and they were trying to become all things to all men, but not doing anything particularly well.
Yeah.
And those systems, given where they started off, they were built to support, not replace, support the communication processes at those times, which are largely email and post,
Yeah.
right? Not to replace them, right? But the wheels changed.
Yeah.
Okay, the wheels changed, expectations have changed. Yet we didn't see the CRM providers evolve to kind of meet those expectations. I'm not complaining because he's created a marketplace for us, right? And you know, the CRM providers have been good enough to integrate with us. They haven't been too precious about trying to push their own portals. But that's because they will offer portals, but they're designed to surface certain information with the back office system, right? Platform portfolio valuations, but there's some inherent issues with this type of experience. If you're relying on your back office system to deliver your portfolio valuations, those valuations are only ever going to be as good as the data in the back office systems, and quite often firms don't really have that confidence.
Yeah.
If you want the back office system to deliver document security through your portal, you can do that, but then I haven't seen any CRM provider that delivers branded push notifications down to their clients, right? It goes via email. So clients are getting an email to click on a link and expecting to trust that link to sign in to review some financial data.
Yeah.
This day and age, this feels like a phishing attempt, right?
Yeah, no, that's right, exactly.
Yeah. So, you know, there's a challenge there that, you know, I think there's more work to be done to deliver a better digital experience. And by the time firms come to us, they've already road tested some sort of portal, right? Because it's easy to go and test the CRM one because it's free of charge.
Yeah.
Right. But the reasons that we're hearing why firms are looking for something more, they're looking for a stronger client experience.
Yeah.
They're looking for greater operational efficiencies. And they're also looking to, frankly, service more clients more profitably.
Yeah.
And the reason why I'm raising this is because this ties in with quite often what you mention at the end of some of your articles in your blogs, where it's all about control versus compromise, low cost versus high fees, and digital versus analog, right? It's a very, very similar journey. So how can SECCL help in that area? What are you doing compared to other platforms to deliver a stronger digital?
Yeah, I maybe should have said this at the top actually in terms of what we're addressing. I mean, one of the big things we're into is connectivity, right? You know, you can access SECCL through our UI, but actually most people don't. They usually use it through either something they've got themselves or maybe someone like yourselves. And so SECCL is like 100% API first company, right? It's not a bullshit line. It's not something we stick on our website. It lives through the company. There's actually much more capability in our API than we've surfaced through the UI so far. You know, so that's how we think, right? And I think what becomes interesting is that you can build any journey you want on top of what we're doing, right? And I think where the old world was, where you know advice, financial planning was 95% an offline activity and 5% online or something like that. And whether because of COVID or just changing mindsets or all of the above, we moved to a position it might be 50-50, right? And you can't compromise. You can't have a brilliant offline financial planning journey that feels very warm and very professional and really excellent, and then give some people some piece of crap on a piece of technology at the end, right? Or that feels exposed to phishing attacks. It's just horrible, right? And it doesn't work. I've had this discussion many times. There's a firm we all know, I think, in London, very professional. Really, you walk in their office, it feels like a boutique hotel. It's really smart. They're dealing with pretty high net worth people, and you get to the end and you get this thing from their platform, and it's just like, this is not acceptable. This is not congruous with what I've just had as a financial planning journey, and everything else has felt amazing. And then I get at the end, I get this digital thing, which not only looks and feels horrible, feels risky, right? And then I've got to, if I do a top up, I've got to fill in a piece of paper. And what are you talking about? I mean, like, seriously. And so, like in SECCL, for example, there is no paper. There just isn't any. The only paper we get is from fund groups sending us contract notes that we don't need because we've already got digital contract notes. So there is no signature. We don't even do electronic signatures. It's all digital authentication all the way through, right? So we're not interested in engaging in a conversation about Oh, obviously we support things like vulnerable customers, but putting that to one side as a small part of the market, we have to have something totally digital, because through the last, especially through COVID, client expectations have gone from, well, I'm just about tolerate this paper thing, through to I'm just not going to tolerate it, right? And we actually as a family went through a financial planning exercise recently, and it was love the guy, love the process. I felt really confident in the plan, that what was going on. And we got to the sort of, okay, now we're going to actually do this and, execute this thing. And it's hideous. I mean, it's just awful.
Yeah.
And it just feels, we've got, because of our business model, we've got a bunch of clients who are, dealing with smaller value clients through fintechs, through sort of themed apps and things like that. They're getting a much better online experience for someone saving, frankly, 20 quid a month than we're giving people who've got £500,000.
£500,000 to invest, yeah.
And it's just,
it's a massive disconnect there.
It's sort of been allowed to happen. And maybe it was allowed to happen because people sort of just people cared so much about the offline bit and they invested a lot in that. And you'll see on whatever, on New Model Advisor, whatever, a financial planner. That's how I set my office up. This is the journeys I put my clients through. We don't talk enough about the digital part of that journey, which is frankly increasingly vital, and probably over the long term is the biggest part of the relationship, actually.
Well, how much of that is down to the actual technology providers, and how much is down to advisors as well? Because
I think it's a two-sided. You're right, they're both, but the problem is, even the advisors who want to do it, it's like, well, I can't, right? Because my platform won't give me my data, or I can't connect, or there's no API. So it's almost like even if the advisors all wanted to do it, it wouldn't happen, right? Yeah. And you get these ridiculous bars, and even some platforms now are adding on APIs and connectivity afterwards, going, well, look, we've got this shiny API. Well, you don't really. You've built a layer between your legacy system and the front end, right? This is not a straight through thing. Like if you apply on SECCL and you put your money in on your internet banking, by the time I've finished the sentence, the money's in your bank account, on your account, on your SECCL account. You can see it there. It's not floating around here waiting to be updated tonight. It's there in your account, right? And that's what I want as a client. I want to be able to see it for real.
Exactly that. And in fact, I should point out as well, because we've been having conversations with your product teams, Annabelle and Fasana on the proposition side, and it's quite refreshing to see people come forward, rather than us knocking on everyone's door saying we want an integration, we want to expand our integration, we don't just want valuations, we want transactions, etc. We've actually had the reverse now, and SECCL is a really good example where you guys come forward and actually say, we understand, we've identified quite a few friction points actually with the way clients are being serviced now. Onboarding is not as quick as it could be. Moneyinfo recently launched a customizable digital fact find. Actually, there's a hell of a lot of information there, which either belongs in the CRM system, or even if it gets in there, it kind of drops off a cliff and people have to start typing stuff into your platform to open up the accounts. There's no reason why that information couldn't be passed through.
That's right. Yeah.
Once the clients, sorry.
Even on the API side, I mean, our APIs on the website, you can see it. You can literally go and get it now and have a look at it. And we had a guy we met about 9 months ago or something, and like he had hooked up to SECCL everything he'd built on the front end before he went to bed that night. Like, I mean, I'm not saying it was perfect. I'm not saying it had been tested, but he'd gone away and taken what he'd built on the front end. He'd been looking for something like SECCL, and he stayed up till 2 o'clock in the morning, whatever he did. And it was all working, right? And that's so different to this, right? It's a 6-month program to get started, and I'll take another year, upgrade it, implement it. And SECCL's like a live thing, and it's a multi-tenancy thing. You can, like literally, you could, was it 12:30 today? You could be in our sandbox by 12:45. You could be messing. It's a live product. It's a in that sense a proper kind of SaaS thing. It's not a.
It is
build this for you and put it into a data center and all that sort of stuff,
No, I should really point out as well is that you don't necessarily need to be technical to get your head around it either, because I've got to give you another good example. James Prideaux from Prideaux's Wealth. So phenomenal work in setting up his own platform. He doesn't have any coders on his payroll.
That's it. And it's a great example actually, because they went away. We were running, but we got some stuff where we're functionally not maybe quite where we need to be, or we reckon functional parity by the summertime with most of the advisor platforms. But there was a bit, James, we didn't have around some of the client reporting stuff, and James went away and got some people to build that, and he built a brilliant thing on top of our API, to reach beyond what the best client reporting is in the advisor platform market. I think he did it. I can't remember, a couple of months or something like that. A couple of people who got in.
Sure.
So that all these things are possible. And if someone comes to us and says, right, we don't like the way that SECCL does client reporting, or whatever it is, all the stuff's there on the API to do it a different way, or even if you just want to visualize it differently, or you've got some proprietary way of thinking about how you do reporting, that's fine. Do that.
Yeah, absolutely. And again, sticking with the P1 example, the P1 investment management example from James, we found it incredibly easy to work with your APIs. Number one, it was accessible. That helps.
Yeah.
Right. And again, it was literally within a couple of weeks we managed to code not just putting valuations, but also transactions and also documents. Right. There's a world of documentation that gets produced off the platform. Yet advisors have to go and generate it and then figure out a way to get it to the clients. Now it's just collected and posted under the advisor's brand through the portal.
Exactly. I think Dave, when Dave was designing all this, Dave Harvey's a sort of genius founder here, where he drew the line on what we wanted our capability to be, I think was really smart. So all the regulatory documentation, all the pension stuff, all the illustrations, that's all in the API, right? So it's not like another system over here where you got to go and pick that up. So what we've done, rather than focus on going too far out to the front and do more there, we just tried to make it super neat and tidy, such that everything you need that might relate to a transaction or executing something is all in the API. And it's just a different way of thinking, really.
It is. And one of the great things I saw recently, and again for the listeners that might be getting frustrated with, we understand there's quite a lot of anxiety with advisors and clients when assets are getting transferred between platforms. Right. I urge anyone to go to the SECCL website, view the video on the asset transfer updates, where you can literally say, who's the seeding provider? What's the plan? What's the amount? And he actually sends a request to that provider to start the asset transfer process.
Yeah. And it's so funny because the friction, everyone goes on about the burden of being a platform operator and this is going to be terrible. I think James would tell you that he's got less people running a platform than he had chasing legacy platforms. That's the reality of it, right? So you've got a cost of running the platform, but you're also saving a fortune across here. So I think my understanding is, and my experience would be, that the three main queries you get into a platform service team are: is my paperwork correct? Did you get it? Right? So there isn't any here, right? There's none of that, right? So that doesn't exist. Did you get my payment? And so that when that comes in, we don't accept checks. We only accept digital payments. And we get this massive ratio there. So, and again, we tell the firm immediately. So even the round trip to the client to get the reference correct is much shorter because it's not going through the platform and everything. And the third one is what's the status of my transfers from these seeding companies, right? And as you say, we surface all that on our transfer workbench, which is, we actually got another refinement of that to come. So I think when we first built it, you be able to see everything that we can see. Actually, now there's been more progress made at the back, so we can see a little bit more than you. So we're going to get that surfaced, in the next few months, so that everybody can see everything. And then you say, well, why do you have to contact a platform? So you have a smaller customer service team. The round trip for query handling is much shorter, and
which is why a lot of firms have platform people anyway. They're doing the job. Anyway,
yeah, exactly, yeah. And they're doing it in a sort of one arm tie behind their back because they've got to phone up these guys over here and wait in a queue for 45 minutes to get the phone answered and all that sort of stuff.
Okay. Listen, David, I'm conscious of time. Just one last question to wrap up.
Yeah, sure.
What is your typical profile of firm? What type of firm is suitable to strike up a conversation about the SECCL proposition?
I would say, so if you talk in advice firms, I think the firms we're getting the most traction with are the ones who've probably got a few $100 million of assets up. It's not the only metric because they tend to be firms that are, well run, good operational discipline, all that sort of stuff. We've got firms, I think probably at the moment we're speaking to probably as low as even 150, 200 million. Excuse the dog, sorry. That's doable, but in general, it's firms who are slightly bigger. And then I say we've also got this interesting channel idea where if we can sell out to some of the kind of advice tech and wealth tech firms, that's quite interesting because that might help us kind of hit some of the market for firms that may be a little bit smaller and don't want all the responsibility, but would like to get the upside of something that's totally digital and lower cost. So that's where we are.
That's great, awesome, that's brilliant. Well, David, thank you for your time. It's
Great to
really
see you, Tim.
appreciated, and I've certainly know quite a few things about SECCL, but yeah, it would be great to continue the work that we're doing together.
No, definitely.
And we find it incredibly easy to work with yourselves, so that should just give testament to how easy it is to access your APIs and build out your proposition from there. So I hope for the audience it was a useful session, and I wish you a good weekend.
Thank you for having me on. I'll catch you soon, okay?